But in the meantime, let's bring in Victoria Greene for some reaction to these results we've gotten so far. G Squared Private Wealth founding partner and CIO and a CNBC contributor. Top and bottom lines look okay. Deposits look okay so far. You know, in terms of just sort of the headline numbers, Victoria, everything looks fine. And we've gotten a big reaction across the board when it comes to the banks in the pre-market session based on these results. What do you want to hear about on these conference calls this morning?
Yeah, I think the market's a big sigh of relief on deposits, especially PNC kind of being the canary in the coal mine for the regionals. I think everybody's going to be focused on what are they looking at for CRE, what are they looking at for going forward and guidance on loan growth and what they're going to have to do with loan reserves and net credit charge-offs, as well as not only did they keep deposits or grow deposit, but how much are they paying for those deposits now? We kind of matter a little bit more, the flavor of deposits, interest versus not interest bearing. And a good example of that is Wells Fargo. I don't have their Q1 numbers yet, but in Q4, their average that they were paying across their entire firm was 46 basis points for deposits. That was versus 3 basis points in Q2. So you're seeing these costs rise a little bit. But I think, again, the initial reaction, big sigh of relief. I think we had expected JP Morgan to do well. They were seen as the best port in a storm. And so we did think there was going to be a flight to quality. We were a little worried about IB because there was not a lot of deal making in Q1 to be had, but they obviously did fairly well in that. But right now, it's going to be about guidance. What are they saying on CRE? And what are they looking out for loan growth going forward? And if it's tightening too much?
Yeah, we're seeing Wells Fargo pull back just a little bit, up by about 1/3%. Victoria, next week we're getting the regionals. You know, you mentioned PNC being a sigh of relief. Yes, it was a sigh of relief, but it had always been viewed amongst the regionals as a larger one, as one of higher quality, one that may not have suffered as much in terms of deposit flight, which is what we're seeing being borne out by its earnings release. So in terms of the other, I mean, do you think, you know, we have enough of a read so far to say we're through the worst of the banking crisis?
I don't know if we can say that yet. I'm not sure we can give an all clear. We've got to see exactly what happened with deposits. Everybody's held to maturity should have had a nice rally. PNC definitely benefited with they merged with BBVA or they bought them out. And they had now 61 branches in California, so they were able to kind of maybe pick up some of those West Coast deposits that were flight out of some of the kind of lower quality regionals. I do think PNC obviously was seen as best of breed of the regionals, but I'm not sure it's going to exactly play out what it did for PNC because of the quality of their balance sheet and their size and scale. Another interesting thing I think investors should be thinking about, if we do see deal making, it may be a little bit slower. There's that 700 billion threshold that the FDIC then you have to start marking down your held to maturities, and you have different rules and regulations. So you may see a company like a PNC a little more reluctant to pick up assets because they don't want to hit that next threshold with higher regulation. So I think we just have to be a little careful. I'm not sure what you're seeing today. You see these three names are fairly quality. Even Wells Fargo is considered quality. You know, they've cleaned up a lot since 2016.